Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, OpenAI releases GPT-5. We'll discuss how the rollout is going and the enterprise opportunity with OpenAI COO Brad Lightcap. Plus the race for AI data centers. It heats up with SoftBank making moves in Ohio, while Meta announces financing for its expansion in Louisiana. And we keep on these tech earnings. We'll speak with CEOs from Twilio, Chime, and Akamai. But first, we return to the public markets. We're a new record high for the NASDAQ 100, so we managed to push on higher, but I'm looking at individual stocks that help contribute to the moves. Tesla actually a decent points perspective higher. We're up 3.3%. Breaking news come from one and only Ed Ludlow about Dojo, the future of the supercomputer. Shares actually managed to tick higher, even though we see that they're wrapping that down, focusing more on using third parties. We'll get to that story a little bit later. I'm looking at Intel off by 0.2%, have been trading higher on the pushback from the CEO saying he is committed to US and national security. We'll get to that in a moment as well. But first, we want to really dive into the world of data centers. SoftBank taking ownership of Foxcon's EV plant in Ohio in order to kickstart the Japanese company's $500 billion Stargate data center project with OpenAI and Oracle. Bloomberg's Peter Elstrom joins us for actually some reporting that Ed Ludlow was really driving before he got on his flight to the United Kingdom. Peter, it's an interesting deal. Basically, SoftBank kind of wanting to get Foxconn more integrated with its manufacturing part of this.
Yeah, this is kind of a mysterious deal. So Foxconn made this announcement a couple days ago. They said they were selling this facility to an entity called Crescent Dune that nobody knew who it was. So we've discovered that, in fact, it's SoftBank. They had been partners in the past. SoftBank is going to own the facility, and then SoftBank and Foxconn together are going to work on these AI developments. They're probably going to build AI servers in that plant to be able to use throughout the Stargate venture that they're supposed to be building in the U.S. As we've talked about a few times before, OpenAI and SoftBank announced that Stargate venture with President Trump alongside them, talking about spending $100 billion immediately at the beginning of the year, or $500 billion over the long term. But it's been kind of slow to roll out in a number of different cases. So this deal is aimed at giving them a bit of a kickstart so they can move ahead with some of those projects, be able to build the AI servers, and then actually be able to build the data centers over the long term.
It's interesting, this pivot from a US macro perspective from EVs into AI data centers. But OpenAI's really been pushing ahead almost on its own here. It's been going into Norway for its infrastructure. It's been going to the Middle East and in the United States with Oracle, and almost leaving, well, it felt like SoftBank behind in a way.
Right. OpenAI has a lot of power here to be able to pick their partners. As we talked about before, also, they are building this big data center in Abilene, Texas. That's been going quite well, quite aggressively. OpenAI, of course, was very closely affiliated with Microsoft in the early days. It put in a bunch of money early on and had been kind of their cloud computing supportive partner for a long period of time. Now they've also talked about working with SoftBank. Oracle is there too. So they're sort of choosing their dance partners as it suits their need at this point. SoftBank, of course, wants to be able to move more aggressively into the AI field. SoftBank shares are actually on a tear right now. They're at an all-time high. Masayoshi Son is certainly getting a bit of a tailwind because they put that money into OpenAI at a lower valuation. Now they've been able to ride that up quite a bit. So I think there is some optimism that SoftBank is getting its footing here. It's being able to make some progress in the AI field that Masayoshi Son has wanted for a long time.
Great context. Peter Elstrom, we thank you so much. And look, speaking of Stargate, tune in later this hour for an interview with the OpenAI COO Brad Lightcap on GPT-5 and much more. But in more data center news, it keeps on coming. Meta has announced financing for a $29 billion data center expansion in rural Louisiana. Now, it's actually selected PIMCO and Blue Owl Capital to lead the debt and equity financing here. That's all according to sources. Representatives of these three companies actually declined to comment. Let's get back to also elsewhere in chips. Intel. The saga continues after the US president, of course, called for its CEO's resignation over conflicts of interest. Intel CEO Lip-Bu Tan replied in a letter to staff posted on the company's website, where he says he got the full backing of the board and what they are working on with the administration to, quote, ensure they have the facts. Bloomberg's Ian King brings us with more facts. What does he think there is misinformation about, Ian?
Yeah, I mean, we saw the Trump social media posting, and this came on the back of what a senator had done when sending a letter to Intel's chairman saying, hey, look, all of these things have happened in Lip-Bu Tan's past. Are we sure he's the right person to be running Intel? And there was a lot of sort of kludging of facts together and accusations made, which the president then responded to. And finally, late last night, we had Lip-Bu Tan directly addressing that and saying, look, there's a lot of misinformation out there. We'll look at the facts, and don't worry, I'm still going to be the CEO of Intel, and I've got the board's backing.
Yeah, he's concerned about his past roles at Walden International, a venture capital firm that does make bets in China and based in Singapore. He's the founder of it. Also, Cadence Design Systems, which he was CEO of. All of this sort of should have been known. He was on the board of Intel for a long time himself, well known. What do you think this means for their manufacturing presence in the United States? Because I almost got a hint that maybe he is recommitting to that here.
Yeah, I mean, this is arguably, first of all, there was nothing new about these accusations against him. 2023, we had the House committee looking into this, so nothing really new here. But you're right, perhaps the trigger point had come a week earlier during earnings when they discussed the possibility of not moving forward with the latest manufacturing technology, of cutting back on spending, maybe not building Ohio, maybe not building other plants, and this is not what the Trump administration wants to hear when they want to be talking about what we're bringing to America and what we're doing, as SoftBank has just played to with the news that we broke there. So it was a kind of counter news cycle there that they didn't really think about. They were more perhaps talking about what investors wanted to hear, which is we're going to get back to profitability quicker, we're going to spend less, and that kind of unfortunately appears to have blown up on them in the political arena, and they had to sort of address that late last night.
Ian King, I'm sure the story will continue. Thank you very much. Now, let's bring in an investor perspective. Kim Forrest, going to break this all down. You're Chief Investment Officer of Boca Capital Partners. You do have exposure to Intel. I'm interested in your perspective on what they now need to do in terms of turning the narrative.
Sure. Well, this is just kind of a distraction, the whole CEO thing. He's in. I'm sure the board thoroughly looked at him, so I'm going to move on from that. But he is there because the last several CEOs have just kind of worn down the bright shining star that is Intel, and he is trying to find his way and trying to find where Intel should play. And I think it's pretty clear that he's looking at what they can do right now. And let's just say they're not up to the task of making a Blackwell competitor. But they do have some good technologies that are used in AI, mostly around packaging. And if I can feel your eyes glazing over, don't do that, because packaging is the thing that makes really low small scale chips work, because you have to make sure the electrons are staying where they're supposed to be going. So packaging is a big thing. But he has a very large task ahead of him of making Intel relevant, because let's say it's been drifting off for the past 10 years.
Are eyes glazing over about parts of chip making? Never, Kim. I am interested, though, more broadly about, therefore, this overwhelming drive towards data center capacity and what that does for tailwinds for the chip makers that you look at. Look, we had this week has been a long one in the world of chips. You've got AMD numbers, which are still showing growth, but perhaps not quite at the pace that people wanted to see. You've also had, of course, this threat of 100% tariffs on semiconductors coming into the United States, but then huge carve-outs. Where do we focus attention when you want exposure to the sector?
Well, I would have to unbelievably agree that AI is the thing that's driving it forward. Now, and it's a very narrow slice of AI. We're talking about the data center. What I'm really interested in is, yes, we're going to have large language models, large reasoning models. I'm much more interested in smaller models that companies are going to actually use to become more productive. The large language models are getting all the love, but I'm not sure that they generate quite enough interest in direct measurable productivity, right? They're being played around with at this point. But that's where all the money's going into, is building data centers that support large language and large reasoning models. Will that go on forever? No. I think what's more interesting is the further we get away from the data centers out to where the information is going to be used, that's when more companies are going to be involved. And Intel may have its place out there, because what we really want are not necessarily walking around robots, but robots that do things that are under the control of the data center kind of computing. So that is a very complicated world, and more semiconductors are going to be needed.
Okay, so spread that love a little bit. It's so interesting that this comes hot on the heels of the scoop from Ed Ludlow talking about how Tesla itself is winding down its focus on hardware and its own chip making with Dojo supercomputer, and looking to others to provide the hardware going forward, more reliant on NVIDIA and on Samsung, Kim. Where else do we like then, other than all eyes on NVIDIA and AMD to a certain extent?
Well, I really love Micron and memory, because for many reasons. Micron has the hot DRAM that goes on the Blackwell chip and probably on AMD's chip, and that's memory that's going to move data in and out of a chip, right? So that's thing one. But thing two is, we are generating so much information, and it's not on spinning disks anymore. It's more on NAND chips. So I love that area. I think it's an unloved area and really unexplored. So I think we could never underestimate the amount of storage that AI uses and how much we're going to have to store just to, get that data that we want to have looked at by AI. Has to live somewhere. I'm thinking it's NAND devices.
Micron currently up about 5% on the day. Also, of course, TSMC reporting that 26% growth for the month of July. We're just on a tear in many areas. Kim Forrest of Boca Capital Partners, it's always great to check in with you. Happy weekend. Now, coming up, we're going to take a look at Twilio. Look at the shares, currently off by 18%. They reported earnings yesterday. We go deep with the CEO. This is Bloomberg Tech. Let's talk about cloud communications platform Twilio. Reporting earnings after the market closed yesterday, the report showed an acceleration in revenue growth. But the company's gross margin, earnings per share, do seem to be a concern to some analysts. Let's bring in Twilio CEO, Khozema Shipchandler, joining us now. I'm looking at your shares. They are down a lot. Just give your perspective on the gross margin.
Well, I would say, in general, we delivered a solid quarter. I mean, it was a quarter of accelerated growth, record non-GAAP income from operations, free cash flow. And I think what we're finding is that at a time when AI is kind of this generational opportunity, we're finding some of those tailwinds get ascribed to Twilio. I understand the gross margin dynamic. It's not necessarily a new phenomenon for Twilio, but it hasn't impeded our ability to get after operating profits and generate free cash. Importantly, on free cash, we raised our guidance for the year, and so we feel pretty good about the outlook. So
for now, is the opportunity more on growth and revenue and the AI tailwinds, as you call it? Because Jefferies, for example, putting out saying there are big hopes you're going to be a big beneficiary of AI adoption. How is that playing out for you? Because many now potentially question it.
Yeah, I do think we'll be a big beneficiary of AI. What I don't want folks to take away from the print is that somehow we're returning to a kind of growth at all costs dynamic. I think quite the contrary. We're running the company with as much focus and discipline as we ever have. We happen to be at a time in which, number one, we're able to take share for a number of our competitors, and we're doing that in a price-disciplined way. And I think the second thing is that given that the AI is a generational opportunity, we do see an opportunity as well to make some short-term investments that we think will drive some medium-term benefits. And I think that's the right thing to do. And so I'm not fixated on a particular quarter. I think over the course of time, that'll play out in our favor and certainly be a good thing for investors.
Oh, what is that investment then? You detailed a platform vision almost in Signal, your event. You're thinking about audio in particular. I mean, you are the way in which I communicate with Lyft or with any app, and many of ways that's going to move to voice. Do you make acquisitions, therefore?
I think acquisitions are something that we think about. I wouldn't necessarily read anything into that. I mean, we obviously have some flexibility in terms of what we can do with our capital, but I think more importantly, the investment in the short term is around voice AI, for example. I mean, voice AI is where so many different AI startups are really launching, right? I mean, a lot of these use cases that you see are voice-based. We have the benefit of delivering incredible voice infrastructure that startups can get going with almost immediately. That's kind of on the low end. And then on the high end, you know, there are fully orchestrated experiences that we drive, combining our communications capabilities across a number of channels, utilizing data as well as utilizing AI, plugging into all manner of different LLMs. And I think that's going to be exciting for us from a growth standpoint, and it's going to drive profitability and cash over time.
I'm looking at your 1 year share price move. It's up 63%. So that puts what today's move is in perspective, Khozema. But you talk about making perhaps the odd acquisition yourself or having the flexibility to do so. Some analysts are saying that maybe you're a target. Have you had any inbound? Would you ever consider that?
I mean, I wouldn't comment on M&A one way or the other. I think we're always going to do things that are in the best interests of our share owners. I can tell you with conviction that we're very focused on running a great business. We think that we have all of the necessary ingredients to create tremendous value for our customers. And as you alluded to a moment ago, over the last year or so, we've shown that we can demonstrate focus, discipline, operating rigor in the way that we're running the company. Investors have benefited from those attributes. And again, I don't get fixated on a particular quarter. I think over periods of time, this is going to play out very much in investors' favor, and I think they're going to reap really substantial benefits.
And where are your opportunities for new wins in particular? When you're getting new customers on because of the voice offerings and the communication offerings, is it geographical in nature that you look around for expansion?
I think there are international opportunities, no doubt, but I would say in the near term, you know, what's really starting to happen is we've always kind of been like a product-led growth company, and so the vast majority of our customers, they're actually self-starters. They come to our console, they get going, they love the usability and the features that our platform gives them. And so that's really the way that people get started. So we've been putting investment into that, making it as simple as possible for our customers to get going. And right now, at least in the immediate term, that's really played out with respect to voice AI. Again, so many different voice AI companies that are launching, they're choosing Twilio. We're the best known brand in the space. We're super simple and easy to use. And there's a ton of value that our customers can get out of that opportunity. On the enterprise side, I do think what we're finding is that they want the kind of broader offering, right? Yeah. They want our communications capabilities, but they also want to use data, and they want to plug in the LLMs that they're excited about to be able to drive both cost and revenue opportunities.
Khozema Shipchandler, Twilio CEO, we thank you so much for your time today after the earnings. Now coming up, more of them, more earnings. Chime releases its inaugural report as a public company, and investors a little disappointed. This is Bloomberg Tech. Chime. It put out its first earnings report since going public 2 months ago. Revenue for the fintech company was strong, but customer growth, it failed to reach the top end of expectations. Let's talk it through. Chime CEO Chris Britt is with us. Chris, solid 37% revenue growth. You got gross margin of 87%, but it seems to be this growth in active members, 23%, that just failed to meet the bar for some. What do you make of it?
Well, thanks for having me. It's great to be here. I'm so proud to be reporting on an awesome Q1 that we've had, our Q2 in our first quarter as a public company. And and being on the show to share more. We had a great quarter. We, like you said, we beat consensus on the top line. We grew 37%. We saw outsized results exceeding expectation across the board on growth on the revenue side, active member growth, and our success on adjusted EBITDA. And we raised our expectations for the year as well on the call. As it relates to the active member growth, it was a great quarter for us. I think naturally, as a new company, new issuance, I think investors are just starting to understand the nuances of our business a bit. And we do have a seasonal business. So on a quarter-to-quarter basis, sequentially, the growth for people that maybe don't understand the seasonality of the business might have been disappointing. But the way that you really need to look at the business is how we're growing on a year-over-year basis. So in Q1, we grew actives 23%. In Q2, again, we grew actives 23% year over year, accelerating that rate. So we actually had an outstanding quarter, and I think it's just natural now that we need to make sure that we educate investors on some of these details of the business, such as the seasonal elements of it.
And maybe investors were looking to competitors in this space, not direct competitors, but certainly in the fintech space. SoFi just had such strength. Do you think perhaps it was what others are doing in the market, and how can you show that you're winning as much and building as much?
Well, I think we have a different business model than a lot of the other fintechs out there, in that we're really focused on serving everyday consumers and banking them in a primary account capacity. In other words, people signing up for Chime and using us as their primary direct deposit account. And we're really at the end of the day, a payments-driven business, not a lending business. And I think that's a real differentiation that's important for investors to understand about the core of our business model. Credit and lending is sort of a mid-teens percentage of our revenue. We're predominantly a payments-driven business, which I think is quite a bit different. And we love these relationships because it allows us to develop long-term partnerships with our members and help them in the areas that matter most, around avoiding fees, around building credit, giving some short-term liquidity around the edges, but also just helping them get into a healthy rhythm of savings and moving their financial progress ahead.
And many of them want to do that far more efficiently using generative AI. That's something you've been interweaving. You've got the voice bot, for example, Chris. Where more can you lean into that?
We're so excited about the opportunity in AI, and I just think, what an exciting time to run a technology company. We feel like we're just in the early stages of a new industrial revolution. If you think about, the original industrial revolution, it was all about new sources of energy that created and unlocked so many new opportunities, new industries, and so forth. I kind of think of LLMs as the same sort of new form of energy that, sure, the LLM companies are incredible, amazing businesses. We're all using them every day. But the opportunities for companies like Chime to leverage AI and move it into the product experience, the operations, is just enormous. We're already serving over 70% of our customer interactions with generative AI.
Right.
And not only is the cost saving exciting, but the actual outcomes are even more exciting because we're seeing a significant increase in the satisfaction levels of consumers getting the answers they want quickly through an AI. Of course, you can always talk to a live customer service rep. But we're really excited about the opportunities, not just on the service side, but even using AI as think of it like a digital partner that's kind of helping you, manage your day-to-day financial life.
I have to leave it there. Fascinating, Chris Britt, Chime CEO. We thank you for your time. Coming up next, one of those LLMs, OpenAI, the COO joins us. This is Bloomberg Tech. We want to welcome our global audience across Bloomberg Radio and television. OpenAI has released GPT-5, its most advanced model yet. The company says it offers key improvements in major areas like reliability, accuracy, and is the strongest generative AI model yet in coding and writing and health. For more, we bring in Brad Lightcap, OpenAI COO. And this feels so primed for enterprise adoption, Brad. When I think of writing, when I think of coding, what is the opportunity there?
Yeah, well, good morning, and thanks for having me. GPT-5 is a significant step forward in a few different domains. So you mentioned coding, you mentioned writing, in health for consumers and medical professionals. And we think that opportunity unlocks an amazing set of things in the enterprise that now become possible. It's a much more reliable model, so it's better at things like calling tools. It's better at things like structured thinking and reasoning. problem solving. And what we see in the enterprise is when you make these core capabilities better, the number of use cases enterprises can adopt these models for increases. And so coding being significant, it really is the language of computers, and that was a significant area of demand for us when we were talking to customers about what they wanted in this model.
I mean, PhD level is what many are calling it, well, what Sam is calling it, and I'm sure yourself. What's interesting is when you've got 700 million weekly users of ChatGPT, how much is that a funnel, a read across into enterprise? How much you get the inbound, because ultimately the people in the workforce are already using it?
Well, really early on when we launched ChatGPT, what we found is, I think, a mere number of months after we launched it, I think something like 92% of the Fortune 500 were actively using ChatGPT, or people at 92% of the Fortune 500 were actively using it. And so it was very obvious for us we needed to go build a work product, because I think ChatGPT as a product is as useful in an enterprise environment, in a work environment, as it is in your personal life. It's an amazing companion if you do anything from marketing to software engineering to data analysis and research. And I think there was a lot of organic adoption when people discovered the tool, realizing that it could make people much better at their jobs and able to do more. And so we really leaned in with that, and we're trying to build the best product we can.
It's like 1/10 of the planet using ChatGPT, Brad. But I'm interested in some analysis that Menlo Ventures has done. They've analyzed the LLM market, particularly in the enterprise space. And they've just tried to push back, saying, look, you lost market share. OpenAI went from 50% in the enterprise market share down to 25%. And funnily enough, the company that they back, which is Anthropic, took the lead. What do you say to those sorts of statistics? Is it something you're seeing within your own numbers?
It's hard to measure these things. You can find measurements that say the opposite. But what we really focus on is value for customers. Like, we've got to deliver the absolute best models and then the absolute best products for developers, for startups, for enterprises, large and small. And that's been our focus. I think our API is a good example of where we've really invested lately. We've got over 4 million developers now actively using the API every day to build new products. We support thousands and thousands of startups that are building with us, that we work deeply with on trying to improve our product so that they can ultimately build a better product. And in the enterprise, I think the demand that we see there is really unabated. We grew ChatGPT enterprise seats from 3 million seats to 5 million seats in a matter of 2 months. And so that growth is accelerating, and we're just starting to scratch the surface, I think, on the impact that we can have both for developers and for enterprises. So we see it as a long game, and we're here to just do our best for customers.
For that, boy, do you need infrastructure. Tell us a little bit about the costs of training this model and how you're looking to expand with Stargate, the project. We've just been talking about how SoftBank's been teaming up with Foxcon, for example, to take over an Ohio EV plant. How is that continuing to meet your demands, or not meet them, as the case may be?
Well, we've seen demand for AI increase at just a torrid pace. Obviously, at the root of that is getting right the infrastructure equation, and we think ultimately that's going to be a critical input to the U.S. And its allies being competitive in this area. And so Stargate for us was a $500 billion project to invest here in the United States to build AI infrastructure for OpenAI and ultimately for the country. We're working with a lot of great partners on that project and hope to bring in more. And I think that's just the beginning. We're going to continue to invest aggressively. We've always found ourselves somewhat on the wrong side of the demand curve for AI, despite the significant investment to date. And so for as long as we see demand, we're going to continue to invest aggressively. AI is interesting in that the more you invest and the more you make it available, the more you make it cost approachable for enterprises and for consumers, the more people want to use it.
Yeah.
So it's an amazing trend, and we'll continue to invest behind it.
We're speaking with Brad Lightcap of OpenAI, the COO for our radio and TV audiences. Brad, how has the rollout ultimately been, do you think? Because so many people wanted to use the app that maybe we hit limits quicker than some anticipated.
Well, we're trying our best to keep up with demand. serving infrastructure at scale at 700 million users and then millions of developers and many, many billions of tokens per minute that we process is not for the faint of heart. Thankfully, I don't have to do that part of it, but we're doing our best to make sure the rollout is successful, and we're hoping that by the end of the week here, everyone gets access.
Your job description is more about building the enterprise relationships, the partnerships. I also think about the partnership you have with Microsoft, and Satya Nadella is out there really talking about integrating already and how excited he was for the product. But there's a tension in the relationship there. I'm interested in what you think the progress being made. Sam Altman was on Networks talking about progress being made with the relationship going forward with Microsoft. Can you give us a timeline about when you think a deal will be done and the future of how they interact with your product, and more broadly, how much ownership they continue to have in the business as a for-profit one?
Yeah, well, we feel really positive about the relationship with Microsoft, and they've been a great partner throughout the history of OpenAI. They've been with us from the beginning, really, since before ChatGPT. Obviously, have been a huge infrastructure partner for us with Azure, and so we expect that to continue. We see no future that of OpenAI that doesn't include Microsoft in a significant way. We've got to work on what that future looks like together. We're in that process with them right now. We feel very good about it, but we think also ultimately there's the world is really big, and the demand for these systems and these models in the enterprise and in consumer is significant. And so they represent not only an infrastructure partner for us, but a great partner to be able to help distribute and bring the benefits of the technology to the world, given the size of their footprint. So more to work through there, but we feel good about it. And like I said, I think when we're standing at the finish line of all this, they'll be there with us.
Meanwhile, Mustafa Suleyman over at Microsoft is busy in the tussle for talent. So too are plenty of other rivals that we understand. Mark Zuckerberg busy. And what's interesting is, well, you as one of those long-tenured employees and staff over at OpenAI remain committed because of innovations such as this. But what about the liquidity that we're talking about bringing to some of your, people that you work alongside? How is that going? We understand there might be even a $500 billion valuation involved in what is a secondary sale of your shares to the likes of Thrive Capital.
Yeah, well, nothing there to share here, but we continue to see very healthy demand for, on the investor side, for wanting to be, I think, part of the OpenAI journey and mission, and we're very grateful for that. And on the talent side, look, I think OpenAI was founded as a nonprofit. It was founded as a mission-driven company to be able to build, general intelligence that's beneficial for all of humanity. And we haven't strayed from that mission. I think ultimately that's what attracts talent, is people want to work for a project that's bigger than themselves, and something that's going to be impactful for us and for humanity and our species. And so I think that's the thing that ultimately attracts people to where they work. Obviously, it's a competitive market and we continue to compete. But at the end of the day, when we ask people what it is that keeps them at OpenAI, it's the mission.
The mission, at the moment, you've got something that's generally intelligent. But it's not artificial general intelligence, Brad. When do you get there, briefly?
I've sworn off making predictions. In AI, it's too hard. The curves are too steep. But I think, we feel really good about the rate of progress. GPT-5 is a great representation of how we start to make progress on little things. Things like, for example, being able to have the model dynamically reason and decide how much it wants to think about the problem that you ask it to solve. That's something that we do natively as humans that previously our models couldn't do. So it's these little steps forward that we think accumulate and ultimately get us to something that will be truly remarkable.
Brad Lightcap, talking about the latest GPT-5. We thank you so much, COO of OpenAI. Now, let's check back on these markets, because we're up 3.3% over the course of 5 days in the Nasdaq 100. We're on a new record high, folks. We have had one of the longest weeks in tech in terms of news flow, whether it's been about tariffs on chips, whether it's been the onslaught of earnings, which we're going to be talking about time and time again, currently up 3.3%. We want to look about what's happening in the rest of the industry and indeed the market more broadly. Bitcoin's down by a percentage point, got a bit of a risk-off tone. You have to keep an eye on what's happening with gold spot, though, because talking of tariffs, well, it's not just semiconductors that's been in the eye of the storm of pharmaceuticals, but gold bars as well. Huge volatility on the course of the day. Meanwhile, coming up, we're going to be speaking with Akamai CEO, Tom Layton. I want to go back to other earnings within this. Trade Desk is off by 39%. Its earnings underwhelmed significantly. Amazon competition. Pinterest off after its earnings, but Instacart trading higher. Expedia, after Airbnb managed to underwhelm, Expedia up more than 4%. We bring you Akamai next, though. Tom Layton joins us, the CEO. This is Bloomberg Tech. Akamai shares today, somewhat volatile after posting second quarter results that across the board in general beat estimates, but you have to read between the lines as to where there was perhaps a bit of a pullback or a miss when it came to compute, for example. But their full year forecast, that was raised. Tom Layton, Akamai CEO, joins us now to demystify for us, Tom, because it's interesting. You have Piper Sandler here really talking about lots of moving parts, and ultimately they see fairly cloudy still of what the ultimate positioning is of the business. Can you tell it, you're really going in on, well, cloud infrastructure here, not just content delivery, not just security.
Oh, yeah. Security, majority of our revenue. Cloud infrastructure services, my goodness, we were up 30% year over year, and we think that's going to accelerate. So by the end of this year, we'll be up 40% plus year over year. Tremendous market opportunity there. Strong tailwinds, of course, from Gen AI. So I think very exciting results for Akamai. You know, strong beat on the quarter, very profitable earnings per share, up 9% at $1.73, and I think a very good outlook, raising guidance for the year.
So maybe just a little bit of a pause for investors. I mean, the shares are still down over the year or 12 months, Tom. I'm sort of interested, therefore, on what they're not getting. What is it about the opportunity in, for example, cloud infrastructure? Why take on the hyperscalers?
Well, it's a tremendous market opportunity. Our customers have asked us to do that. You know, we, with our distributed platform, which is unique in the marketplace, we're in 750 cities with our points of presence. We can get enterprise compute instances, their containers, closer to the end users. And that gives you lower latency and better performance. And for a lot of applications, that matters. Also, we can do it at a lower price point. In fact, one of the hyperscalers is an early adopter of our new managed container service. They want to have their compute instances in hundreds of cities around the world, which is something only Akamai can do.
Interesting. I mean, maybe people are looking at what drove some of the revenue beat, and they're looking at FX, but they're also looking at TikTok inclusion. Have you decided that the risk of being banned is just off the table, and you're going to really be starting talking about this client once again?
Oh, there's always risk, though it seems that from what we're hearing from public sources that, you know, a deal has basically been structured, and, you know, there's obviously caught up in trade negotiations, but that at this point it seems like the ban has been postponed several times, and so we're not seeing anything that suggests that that's going to change in the near future.
You do their content delivery for them. It's interesting that security is where a lot of your growth, and as you say, the most part of your revenue has been coming from. What in security is driving that growth? Where are people coming to you?
Yeah, we have the market-leading solutions for web app firewall, for bot management, for API security, for stopping ransomware with segmentation. And of course, the attack rates have been going way up. The penetrations have been going way up. And we have the solution that stops the damage caused by those attacks. So if the ransomware gets in, we identify it quickly. We don't let it spread. And that protects our customers so they don't, you know, have these huge costs associated with being shut down by ransomware.
Of course, generative AI in many ways making the field of security ever more evolving and nimble is what's crucial, Tom. What I'm also so interested in is the way in which you're thinking about education here in the United States, skills in particular, and upskilling. This is something that the US government is calling for a lot, and particularly in the era of generative AI. How are you seeing the skill set and the pool of talent? Is it good enough for you?
It's going to change with Gen AI. We're seeing, tremendous efficiencies across most job types at Akamai, so that our employees can do more in the same amount of time by leveraging Gen AI. And I think you'll see training. We're doing training ourselves so that employees will change maybe how they do certain things, and they'll be more efficient by learning how to use the Gen AI tools. I think it's really very exciting, and it probably is going to be a sea change over time in education.
Tom Layton of Akamai, it's always great to have you on after your numbers. Thank you very much for joining the show. Stay well. Meanwhile, coming up, Tesla, well, it is disbanding the team that was meant to give it the computing muscle in the AI race. It's an Ed Ludlow scoop. We'll get behind it with you next. This is Bloomberg Tech. decades, Samsung was the world's leading memory chip maker, but the tech giant was recently surpassed by smaller rival SK Hynix. So how quickly can it reassert itself in the AI race? Our Bloomberg Originals team took a deep dive into this.
When you're out shopping for 7-megawatt offshore wind turbines, you think Samsung, right? Well, probably not. The brand is much more famous for its phones and flat screens. But arguably, the most important drivers of South Korea's biggest family business are these things. And for the first time in decades, the company's got a massive problem here.
Samsung is under assault from all sides, and they are getting stretched thin.
Samsung is in this position of playing catch-up, and that's difficult to do if you don't have growing revenue, if you don't have expanding profitability.
And unfortunately,
the chip profits tumble. Big disappointment. The semiconductor division reporting operating profit of 400 billion won. Totally missed analyst projections for 2.73 trillion.
Samsung shares have whipsawed in value since their 2020 peak and tanked in 2024, while long-standing rival SK Hynix surged. The crisis is easy to miss amid all this.
The Ultra experience is ready to unfold.
But behind the cats and choreography, Samsung's hidden struggle threatens its national identity amongst a population that relies on it like no other.
It is probably the most influential company in Korea because of the importance to the economy.
And maintaining that influence may hinge on a piece of technology you probably own but have never even seen.
Catch the full episode at Bloomberg.com, on YouTube, or on the terminal. Now, one company depending more on Samsung for its future AI chips is Tesla. And we've got some updated reporting from our own Ed Ludlow. Tesla is disbanding its Dojo supercomputer unit, and its leader, Peter Bannon, is leaving the company as it depends more on third-party hardware suppliers. It's all according to sources. Now, the team, as we told you yesterday, had lost workers to Density AI. It's a competing startup founded by former Dojo executives. Let's get more Bloomberg's Max Chafkin. Ed, busy on his travels. And Max, we turn to you as Elon Inc. Helmer. What do you make of this move away from making its own hardware in the AI chip space?
I mean, it's definitely a setback because Tesla, of course, somewhat famously likes to make everything. That's kind of Elon Musk's whole thing. He's tried to make a vertically integrated auto manufacturer that makes Tesla very unusual, and also has been trying, obviously desperately to pivot towards AI. So this is a setback. I will say it's a setback that I think people saw coming to some extent. In 2024, during an earnings call, Musk sort of started to tamp down expectations, said they were going to rely on two paths for training its AI models. One would be this Dojo thing. The other would rely on NVIDIA chips, the same very expensive chips that everyone is essentially using to train their models. So it's a setback, but I don't think it's devastating. I think what is maybe more troubling is just losing talent, right? We're in the middle of this AI talent war. Tesla historically has been very competitive. Of course, the stock, for a while was just exploding, and it has been fairly stagnant over the last couple of years. And I think you're seeing that, right? There are startups out there and these kind of very large privately held companies like OpenAI and Anthropic that are just throwing huge sums of money at developers, and you're seeing Tesla clearly struggle a little bit to keep up and retain.
And Density AI now forming as a new startup to take on the world of hardware and AI. Max, briefly, I mean, Elon responded saying, look, it doesn't make sense to have two different avenues for chips, and A15 and A16 they're going to continue with. But more broadly, this was thinking of the way it set itself apart for the future of supercomputing, being vertically integrated. Morgan Stanley thought it would be $500 billion added to the market cap.
Yeah, and all those estimates, of course, look silly, and I think you have to ask yourself, there are lots of estimates like that around Tesla and its AI ambitions, few of which are really realized yet. And it does make you wonder, like, should we revisit some of those other assumptions? You know, people talking about valuations in the trillions. You know, look, Elon Musk said this was a moonshot. I think it was kind of a moonshot because the truth is NVIDIA dominates this market, the market for training chips. And Elon Musk took a crack, but wasn't able to get there.
Bloomberg's Max Chafkin. Tune in to Elon Inc. It's weekly. We thank you so much. Now that does it for this edition of Bloomberg Tech. Quick check-in on the markets for you. We're off by 0.8% on Bitcoin, digital gold, but real gold flat. But boy, are we going to potentially see some tariffs on gold bars affecting Switzerland in particular. Keep an eye on that story. Nasdaq 100 up by 0.8%. A new record high, folks. Check out our podcast. You can find it on the terminal. This is Bloomberg Tech.